the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with our friends Massar and Matt Miller. Welcome to all of our audiences across our Bloomberg platforms, radio, television, as well as those folks on originals and streaming on YouTube. Carol, we're going to close out this month here on a down note. There is some bright spots out there. Unfortunately, those bright spots are pretty narrow, and that's basically around tech and all things AI and chips.
Yeah, no, listen, I feel like you guys probably the same with Matt and myself. We've been having all of these market conversations, and everybody keeps reminding us, hey, folks, the gains that we've seen in the overall market are really just a handful, a basket of stocks. We keep talking about the narrow breadth. And, is that cause for concern? Can we broaden out? I guess that's the big question at this point, or is that just a sign of more downside to come here, Matt?
Has anyone said, Romaine, on your program at all in the last 2 hours, sell in May and go away?
Not yet, Matt. I think that would kick them off the program.
Well, today's the last day, if you want to do that.
What do you do in June?
I think you stay away, is the old adage.
Well, it's actually supposedly a really weak month. It's a S&P 500's second worst month, down an average of 0.4%. September, by the way, is the worst.
That is a rumor, actually. I found that to be untrue. Over the last 20 years is what you're saying, right?
Yeah, over the last 20 years.
Third worst performing month because January is bad as well.
Did you ask ChatGPT that?
SEAG Go. No, I used the Bloomberg SEAG Go. And you can change that data, by the way. If you look at 21 years or 19 years, it offers wildly different, so the averages can change a lot depending on the data.
You can cherry pick your stat.
Yeah, you can cherry pick your stats, but let's make it clear. The winner for this month, of course, was what we saw in the tech space here. At least on the day, you have a Dow Jones Industrial Average. Looks like it's going to close out the day down by about 0.4%, and it's down on the month by about 3%. The S&P 500 down by about 6% here on the day. It's actually slightly higher on the month, but only by about 0.3%. The Nasdaq Composite down 0.6% on the day, but on a monthly basis, up about 6% here, and the Nasdaq 100 up almost 8% on a monthly basis. Meanwhile, the Russell 2000, that was your relative laggard on the day and on the month as well, down here on the day by about 1%, and on a monthly basis, it's down by about 1%.
All right, I know the numbers are settling in, but I'm pulling up the S&P 500 for the month. The top performing name in the S&P, Advanced Micro Devices, up almost 32%. On the downside, you guys were talking about this just shortly ago on air. Advanced Auto Parts down about 42% over the month.
All right. Do I need to break these Rich Go headlines? No. Let's look first at the breakdown in terms of the industry groups. You had the defensive sectors rising today. Investors were buying utilities, buying healthcare, buying consumer staples, maybe looking for a place to hide out there. They were selling energy, and I think that's on the back of the very bad China data that we got overnight. But they were also selling financials as well as IT stocks.
All right. Let's get quickly to some of the gainers because we do have some earnings coming your way. Intel, top of the S&P 500 and NASDAQ 100. Heavy options volume, trading in Intel bonds was more than twice than average to today. Social media postings jumping as well. Gaining after the company's CFO said he expects second quarter revenue to come in at the upper half of the forecast range provided last month. So this was coming at a TD Cowen conference. So shares of Intel just shy of a 5% gain. Twilio, also an outperformer, up 11% today. It's roughly up about, it's had quite a run over the past 3 days. I think I had a run of about 15%. Kathy Wood telling Bloomberg late yesterday that Twilio is among the stocks she expects to eventually grow into the size of NVIDIA. And then you also had the stock up. Activist investor Legion Partners meeting with communication software companies' board of directors, so Twilio's board of directors and managers, to suggest some changes to the board and maybe consider some divestiture. So that's why you're seeing a lot of activity. SoFi, let's go there, up 15% today, on pace, for the best two-day rally since August. A deal to solve the U.S. debt limit crisis, including resuming student loan payments, has given a boost to this name in a big way. Stock up roughly about 50% so far in 2023, so some outperformance there, Matt, as well. What do you got?
Actually, I'm going to pick up the decliners here.
Forgive me.
A lot of weakness in the banks, and so I'm just going to pick out one of them, which is Wells Fargo, losing almost 3% after the CEO, Charlie Scharf, spoke at a conference and said that there's no question there's going to be losses for real estate loans. But the bank is managing its loan portfolio. It's working with borrowers to restructure terms, but nevertheless, you see some weakness there. And we had mentioned Advanced Auto Parts. down 35%, the most since 2004 after a big first quarter miss, and it reduced its full year forecast. This is more specific to AAP's specific management and how they're doing things rather than the overall sector, but its peers like AutoZone and O'Reilly Automotive also lower on the day. And there's an ETF that tracks Turkey, TUR, down 3%, tracking losses in Istanbul. The stock market there had rallied on hopes that President Erdogan's election victory would perhaps lead to more conventional economic policy, maybe the end of let's cut rates to reduce sky-high inflation, but we'll see how that all plays out. That he did promise to put in a new economic team that would have more international credibility.
Let's do a quick pivot away from equities right now and take a look at Treasuries. In fact, we're getting the latest data, the latest daily data here on the Treasuries cash balance, $37.4 billion as of yesterday here. That's according to data that was just published right now. Of course, this has been fluctuating, but the persistence over the last few days and really last couple of weeks has been below 100 billion as we wait potentially for a House vote at some point tonight, and potentially we should say, that would advance that debt deal. As far as the Treasury space goes here, you're taking a look at the yield space, and you did see buying for a second straight day. Yields on the lower end of the curve down about 5 to 6 basis points, and on the longer end of the curve down about 5 basis points or so, guys.
I'm looking, by the way, at a company you may not have heard of, OKTA. The ticker is OKTA, application software company. I don't see AI directly in the description.
They do like authentication, like at works and workplaces.
You
and
have
so
heard of it.
We've actually had the CEO on several times.
Got it. Okay. Well, first quarter adjusted EPS was 22 cents. That crushes the street's estimate for 12 cents in earnings. Revenue is $518 million. That's a little bit better than the $510 million that we were looking for. And in terms of the forecast, on revenue, they're slightly above the street at 533 versus 528, and on adjusted EPS, they're looking for 21 to 22 cents, which is much higher than the 16 cents the street has expected.
All right, I'm going to take a look at pet food supplier Chewy. Anyone who has a pet knows this company well because you buy at least $50 of pet food to qualify for free shipping. The stock is moving up as first quarter net sales beat analyst estimates, $2.78 billion versus the estimate of $2.73 billion.
A lot of other earnings crossing the wire right now, including Nordstrom and Salesforce. Salesforce earnings coming in for the first quarter here. Adjusted operating income, $2.27 billion. That looks like a slight beat over street estimates of about $2.1 billion. EPS at $1.69. That's a big beat over street estimates of, that's versus a year-over-year number of about 98 cents. Not quite sure what the street estimate was, but it looks like they beat on all of the key metrics here. And here's your outlook going forward here. They're giving a full year revenue guidance of $34.5 to $34.7 billion. The street on average was looking for revenue for the full year of about $34.63 billion.
All right, guys, let's go now to retail. Another retailer reporting, Nordstrom specifically, and this is one that's been under pressure. It's a highly shorted stock, about 22% of the float. As it comes across the Bloomberg, first quarter adjusted EPS, 7 cents a share. The street was looking for an estimated loss of 13 cents a share, so that is better than what the street was forecasting. Still sees fiscal year adjusted EPS of $1.80 to $2.20. The estimate out there on the street is $1.89, so higher on the upper end, and we're seeing some enthusiasm in the after hours trade. It's up about 3%. It's down 5% in 2023, but we're seeing a bump to the upside now, almost a 4% gain. Company also talking about first quarter total revenue. That was slightly better than what the street was expecting, $3.18 billion. The estimate was for $3.12. First quarter net sales, $3.06 billion, $3.05. But anyway, this is a company that's been going through new leadership, some changes, working on a lot at the company, and you're seeing it, some optimism in the after hours.
I do think it's interesting, though. I mean, still, you're talking about net sales down 11, 12% here. So I'm kind of curious as to what's the story beyond just this quarter here. Where's the growth?
Nordstrom Rack, I bet, is what they're going to talk about as we head into a slowdown.
Yeah, it looks like, can I just say, Nordstrom Rack brand net sales, $1.04 billion. The estimate was $1.02, so it does look like maybe a little bit better than forecast.
I just want to point out Crowdstrike is not only out with earnings, they had revenue up to $692 million. The estimate was for $676 million. And the EPS, 57 cents, beating the street's 50-cent estimate. But the stock is down 10% in the after-hours trade. So there's something in the earnings report that Wall Street doesn't like, or it just wasn't good enough. Maybe not enough mentions of AI, but they did have an AI agreement this morning, didn't they? Yes, with AWS.
Yeah, well, I think that growth rate coming down, I mean, that's causing a lot of concerns for a lot of these software companies. People were used to those high growth rates, and that's just not sustainable.
All right, guys, we're definitely seeing some movement. As we mentioned, we've got a rally in Nordstrom in the aftermarket, and Salesforce down right now about 2.6%. So we'll continue to follow that certainly into tomorrow's trade. All right, that's a wrap. Our cross-platform coverage on radio, on TV, on Bloomberg Originals, and of course on YouTube. We will see you again tomorrow, same time, same place for Beyond the Bell, 4 p.m. Wall Street time.